What's up, everyone? It's May 1st, 2025. This year's kind of flying, 5 months into the year. So, hope you guys are doing good, having a good time, trying to become a systematic trader. And, it's nice to see the people in the Discord are starting to eat. Some of you are messaging me your profits, and I'm very glad you guys are understanding leg counts and how to use them to your advantage. I'm going to be focusing on leg count and trend line breaks for this video and the next maybe 5 to 10 videos. Still talking about the market cycle and whatnot. So, I hope you guys caught yesterday's video about how this is 3 to 4 legs down and how this is 3 to 4 legs up for the bulls. If not, definitely check that out. That's April 30th video. So market cycle reset right here. We break out leg one, pull back leg two, pull back leg three, pull back leg four for the bears, and then for the bulls we have 3 rallies. Leg one, pull back leg two, pull back leg three. The third rally is climactic, going to the EMA. With 2 micro channels against each other, the market's going to go sideways, and we can see that demonstrated right here. Sideways price action. Bulls are buying lows, bears are shorting highs. We get to just below the 50% mark of this bar, the big bull bar, and now we're in a rally. So you can see leg one, pull back leg two. Let's see this. Leg one. Put it to the bottom of the pullback, and they've almost met their leg two, which would be right around here. These bear bars ended up becoming a complex pullback. It's a wedge bottom bull flag. So here's the pull, and then bears tried three times to go lower. Leg one, pull back, leg two, pull back, leg three. Wedge bottom becomes a good rally. Now we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 bull bars in a row. Although we've had these bull bars in a row, we have had some trend line breaks. So here's a trend line, and this takes out the prior candle's low. So that's the trend line break. And now we're rallying higher. That's one way to count a leg. Even though they're all bull bars, a trend line break is the start to a second leg on a smaller time frame. Look at this chart. So this is the daily chart. This is the 15-minute chart. You see this drop down? That's the trend line break right here on the daily chart I was just talking about. So here's a trend line. You can even say there's a minute trend line break right around here. But just for the conversation, here's the trend line I was talking about. Started here. Well, it starts there. Started there, and we go up to here. Put it right around there. So the high of this bar. This bar takes out this bar's low. So now we broke the trend line. And even though it's all bull bars in the daily chart, we can see right here on the 15-minute chart, there's bear bars. So that breaks the trend line and starts at leg two. That's one way to look at trend lines. Let me turn these on. Okay, so we have a gap up. When we have a gap up, the general expectations for the day is a tradable leg within the first hour and then sideways price action. And that's pretty much what we got. We got a sell back at the end of the day. So we had that gap up. We had a tradable leg, 3 to 4 legs higher. Sold off, big up, big down, trading range behavior. We were in a trading range that was coiling up. It was getting hard, Bull bar, bear bar, bull, bear. It was very tight trading range at the end of the day. Yesterday we had a gap down. Became a climactic gap down, and we rallied going sideways, and then we broke out. Today we see a continuation the first hour of the day. Breakout, however, bar one is a bear bar that can become a pullback. Bar two, there's a hidden bear leg because of the tail right here. And then bar three is an inside bar. So if you're long or short, it's safe to get out of that because inside bars are the only bars not breaking out. It's a triangle, but if you wanted to stay in a trade, I would bet on long because of the momentum from the gap up. However, buying bar three is not a trade I would take because that's just not part of the system I'm trading. Bar four, bull bar closing on its high, but we're not closing far past bar two. So if you're thinking we're going to rally, be cautious because we actually just had a big down, big up, trading range behavior. Bar five, there are bulls here trying to buy highs, but then it sells off. They're trapped, and then when they see bad follow through, the bulls are going to sell out, and bears are going to short the double top. Here's the double top. They short that and make a good scalp. Bears that short bar five actually make almost 1 to 2R pretty quick. Bar five, or excuse me, bar seven. Bull bar closing on its high, tail, but there's more body than tail, so this could be the bulls are trying to trend. Bar eight, bad follow through. Again, the bulls that bought this are underwater. They bought the market, it rallied, and then it sold off, closing below their entry point, so they are underwater for a little bit. Bar nine, pulls back slightly, and then rallies. So bulls were willing to buy pullbacks, and you can see that through bar 9's tail. It pulled back and then rallied. So bulls are buying pullbacks. And then look at bar 10. Bad close for the bulls. So bulls are not willing to buy high. And then we see a breakout 11. Now, I just said that bulls are not willing to buy high. So how did this breakout happen? Well, look at where the breakout happened. Remember I was talking about gaps? Look at the gap. That gap happened at the swing high 5. I'm willing to bet this breakout bar 11 also had trap bears buying back shorts when it went past their entry. So they had limit orders were set right here. Bar 11 starts to rally, filling bears, but it's not selling off. So then they buy back shorts. Bulls are buying, bears are buying, causes a gap and a breakout would fall through bar 12. Now we know that bears are trapped, and I hope you guys are starting to understand gaps. Gaps will be the video I'm dropping for the members this weekend, so stay tuned for that because it's important to understand how breakouts work. 13, shallow pullback after 4 bull bars. That's a good buy, and we can see that with 16. Bulls are willing to buy the first pullback, first bear bar, trend line break. Again, a trend line break is nothing more than the previous low being taken out in this situation. A trend line break here for the bears would be 32, taking out the previous high of 31. Starts the second leg. So there's a couple ways to leg count. You can leg count with trend line breaks. You can leg count with opposite bars. You can't. One's not better than the other. If we have multiple bars of the same color and there's a trend line break, then that's a smaller leg starting the second, a smaller time frame starting the second leg. If you see the bar print like bar 13 is a visible bear bar on this 5-minute chart, then that's a first reversal on the 5-minute chart. Bar 14, closing on its high, bulls are taking profits again. They're not buying highs, but then you look at 15, bulls about to pull back again. 16, bull bar closing on slow, bad fall through 17. There's a tail. It's still telling us bulls are willing to buy pullbacks, but they're not really buying high. 18, big bull bar closing on slow. This is interesting because now we're coming to the third leg. Third legs are generally have climactic price action, and we can see that because the next 3 bull bars after 19 was short. There was very small bull bars, no gaps, and it's the 4th leg. So just counting on the 5-minute chart, we'll say this is a trading range. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. Leg 4. So now we know we're in a trading range. Even if we don't know what the high of the day is or the low of the day, we know that after leg 3s and 4s, we are in a trading range. Bar 22, bear bar closing on slow and really good follow through all the way down to 30. 24, on a smaller time frame, there's a trend line break, but I'm going to just draw the trend line in actually. So look here. No high was no bar took out the previous bar's high. 24 is low, so you could trail your stop all the way down to 31. 24, the high was not taken out. 25 did not take out 24's high. 26 tried to rally. It's an inside bar, but it didn't take out 25's high. 27 didn't even make it to the midpoint. There's now, is there a gap? Oh, the gap's right down here on 28. So there's a gap there. You could fill that in. Look at where the gap is. The gap's right around the 17 low, so bulls were just thinking about buying that, but it ended up not being a good buy. Trapping bulls, creating a gap with 28. 29, now we have another gap below the EMA, so bulls that wanted to buy at the average price ended up being underwater again. That lines up to the pullback. You guys kind of see how the puzzle starts to piece itself together if we just focus on market cycle gaps and leg counts. 30, biggest bear bar after several bars, so this could become climactic price action. And shortly after bar 30 happened, we did get a pullback on 32. 31, inside bar, I think it's okay to get out shorts. Now we have a trend line break, bar 32. So officially, this is the first reversal on the 5-minute chart. On a lower time frame, here's a reversal, there's a reversal, there's a reversal, but they all stay within the trend line. 31 is that trend line break. 31 is a harder buy, or excuse me, is a hard short compared to bar 13. I like bar 13 because it's steady, it's going with the momentum, it's a gap up, 4 bull bars in a row. You can see a tail, so bulls are still willing to buy pullbacks. First trend line break, context for buying this is good. You can argue that dynamic is also present on bar 32. Bears that press this want to add to their position. Bulls that are trapped here, they want to sell out of their position, and then traders like us who are looking for second legs want to short this. The problem I have with 32 is that there's no tail. So this could have This could have just been a sell climax and then we rally. In this situation, it became a 2-bar reversal with bar 33. 34 sells off, very bad close, kind of bouncing off the 7 low, doesn't make it there all the way. 35 inside bar, safe to get out. Leg 1, pull back leg 2. Second leg trap. In training ranges, second leg traps are very common, so just be cautious of that. Second leg traps were like my biggest P&L crusher, so that's why I always try and point them out. So now we're definitely in a training range. Big up, big down. And then we have 3 bear bars here. We have 3 bull bars here. So now we're in a training range within a training range. And look what happened. The market got coiled up. It became a tight trading range, which is the worst situation for a breakout trader. Okay, so these 3 bars are going to have to get second leg. These 3 bars are going to have to get second leg. This second leg here started with 38, 9, and 40. But again, you're shorting a leg 3, so be cautious if you're going to take that short around bar 40, or you short the low, or you short 39. Just you got to scalp out. Especially when you start to see bad follow through 41, 42, you got about 10 minutes before you take a big hit, 43. Second leg, 36, 37, 38 happens right here, 41, 42, 43. And then again, look at where the gap's at. It's on the EMA, and it's at the swing right here. So limit order bears that got short here looking for, they were looking for this, are now trapped here. And the market rallies, but trading range behavior gives the bears an opportunity to get out. They should get short here, they short more here. Then get out on 51 and make a small profit on both trades, or they get out at break even on their first trade and make a scalp on their second trade. Just talked about second leg traps. Leg 1, pullback, leg 2. 51 is more of a test of the 43 low. Trading ranges have deep pullbacks, and we can see that with 51. 52 sells off and then rallies. So bad follow through if you're looking for this collapse. And then we go sideways again. Kind of looking like a bear flag that could break out, but then we start to see bulls breaking again. Again, we are above the higher time frame EMA, so we are in a bull regime. That means bear setups will fail just a little bit more. And then we see a 4-bar rally showing to get a second leg. If you are going to get a second leg, again, trading range behavior favors deep pullbacks, and we see a deep pullback with the body of 59 and the tail of 60. So there's that deep pullback, and it rallies. And it's a hard rally. You know, you're going to go sideways for 20 minutes, and then if you don't pop out of here, you're pretty much back to break even if you buy the high. 64 rallied and then sold off. So bulls are not willing to hold high. They're just buying low and kind of hoping for it to scalp out for a few points. 65, bear bar closing out slow. Good follow through 66. Here's a wedge bottom bull flag. That's interesting. You could say the pull starts here, and then look at the wedge bottom. Leg 1, pull back. Leg 1, pull back. I did it again. Leg 1, pull back. Leg 2, pull back. Leg 3. Because there's a push here, push here, push here. You could argue that 66 is also a push down. So bears are trying multiple times to go low. It's not happening. Same situation for the bulls. 69, 70, 71, 72. Rally, pull back leg 1, pull back leg 2, pull back leg 3. Bulls try 3 to 4 times with this rally here, and it goes sideways. Really bad follow through 73. Bears short this and then make a quick scalp. Take profits at the previous swing, 75. This is nasty. 76, bull bar closing as high. Look at the bulls that got trapped. That's unfortunate because 77 did tick above 76, so they're trapped. They're completely underwater. You're long and you see a bear bar like this, a bull's gonna get they're gonna hit out. If you're trading small enough and you're willing to swing overnight, you could average in, but it's just not worth it. It's better to just wait and see what happens. So earlier I mentioned when we're in a bull regime, bear setups tend to fail. And look at the overnight session. The bear setup did fail. Failed breakout below the higher time frame EMA. Now bulls are rallying. It's just some food for thought. If you're getting caught going short, think about what the regime is. And yeah, I'm going to keep talking more about trend lines. I briefly touched on it today just to kind of warm everyone up, and then we're going to keep going into trend lines and leg counts. And in the previous videos, I think I started to get carried away with talking about fractal price. I was jumping between fractal price action and visible price action. Fractal price action could be, there's a bull leg on bar 34 that has to be said because there's a sell off and it rallies. And then visible price action would be 36, 37, 38. There's a printed bull leg on 5-minute chart. So I'm going to try and focus more on the 5-minute chart and just reintroduce fractal price action because a few people messaged me and it became aware that I just was jumping between fractal price action and visible price action. That'd be hard to that can be hard to follow if you don't understand like trend line breaks and gaps and things like that. So guys, I appreciate your time. I actually did forget to do the measured moves. I can whip through those real quick. But I do always appreciate your guys' time and support. The Discord is becoming fun. You know, the questions you guys are asking me, it's making me a better trader. I hope when I answer them, it's making you a better trader. That has been my goals. You know, I want everyone to get paid. Got a couple payouts this year. April was rough for me. And yeah, just going to keep going. Breakout below the EMA. 1-to-1's a minute on 34. This is obviously, I mean, you know what's crazy? Trading range behavior, delayed second leg. Let's just see if it worked. Hold on. Delayed second leg. And 1-to-1 did work. So don't know if it's the strong bears would take that. But I think for day traders, it's best to just either scalp long and short, scalp long, or wait for the breakout, wait for a new breakout, or something of that nature. Leg 3, 39, 40, it was not met. Here's a route. All right, let's do it from right there. 1-to-1 was met. That's pretty cool. And then yeah, 1-to-1 was not met here. 1-to-1 of that. If you're slow trading this, you're crazy, but good job if you got that. All right, guys. Have a good one. Thank you for your time. Thank you for your support. Hope everyone has a good day. It's Friday tomorrow, so let's be smart. Let's trade strong. Use your stop loss. Respect your rules and your system. And yeah, I'll talk to you guys tomorrow. Thank you for your time, everyone. Have a good weekend. And bye.